What's up everyone, welcome back to another video. In this video we are going to look at fair value gaps. Now there's lots of terminology around this: fair value gaps, voids, imbalances. It's all the same thing, and I'm going to show you what it is, how it represents on the chart, and how you can use it. So let's have a look at this example here. Nice and clear. Very simply, a fair value gap is where there is no candle either side, no wick either side, okay? That's to the immediate candle left and right of the current candle. So as we can see, nothing here, nothing here. This is the fair value gap. Another example: the immediate candle to the left, the immediate candle to the right, there is nothing there. Unlike these candles, where the whole thing, okay, is covered by the next and previous candle, these ones, they have nothing there. That is the imbalance, the fair value gap. There's a void. This current candle here, okay, so far there's nothing covering it. However, the next candle has not been printed. We will not know if there's going to be a fair value gap until the next candle has printed, okay? So moving price on, we can see that although it looked like we were going to have a really big fair value gap, it's actually only this, okay? Got this either side. Now, fair value gaps are used a lot and talked about a lot because it is very likely that they are going to be respected. The theory behind it is that this is where an institutional move has been made, an institutional order has been placed, and because it has such high volume, price could not be balanced, hence the name imbalance, void, fair value gap. And we do find most of the time that there will come a point where that is balanced, okay? We might get a wick, we might get a candle body, but we do see that gap balanced. That's why we use them in line with our order blocks, because essentially price should come back and respect that area to rebalance the price. So just to give you a few more examples, hopefully it's nice and clear anyway. Immediate candle to the left and the right is empty. That is a current fair value gap. That is an area that we can look to in the future for price to come and respect. Okay, we can use that in our analysis as a confluence for price to come back to. Do we have any others here? Anything we can see? We have another one here. So candles immediately to the left and the right. We have a gap. That area there is still open. It's got the potential to come back and be filled. If you start looking for them, they're everywhere. Okay. Left and right, balanced, not balanced. Fair value gap. You will find them in a lot of places. You do need to use them in conjunction, I think, with other confluences such as order blocks, points of interest, liquidity. For example, if you get an area where liquidity is built below, so if you had something like this, that's great because we know we have a pool of liquidity, a fair value gap, and essentially, more often than not, an order block above, which is a great area to target. I'm going to keep this one short and sweet. I hope this is informative and this helps, guys, especially if you're new to trading. But just a very quick recap: a fair value gap, an imbalance, a void is this. This is how it's represented in the market. It is a space where there is nothing either side of that candle. Okay? There is nothing either side of that candle. It is an empty space, and it's more often than not respected in the future. Guys, I hope you've liked this video. I hope it's helped. I will see you on the next one.